Ralph Nader. I just did an interview with StuTaylor, and unlike so many radio talk show hosts, he lets you talk. He doesn't overtalk. He doesn't shout, and we can have a good conversation whether or not we agree.
Hey, ever feel you're in a battle? Actually, in a battle from the time you're born until the time you cash in your chips. But to be more specific and to get away from the humorous aspect of it, when you're investing, I mean, are there similarities to being in a war, in a fight, and the difficulties of it? This has been put together in a really interesting book, an interesting concept. The book is Combat Investor: Guide to Real Estate Investment Warfare. It's written by JohnOharenko, and it's published by Author House. You can go to authorhouse.com, barnesandnoble.com, amazon.com. The book is available in paperback, hardcover, and ebook, and the website, combatinvestor.com. Welcome to the show.
Thank you, Stu. My pleasure.
Yeah, it's nice. It's nice to have you on. And since the title of the book is Combat Investor, how do you define it other than what I said in my opening remarks?
Well, Stu, Combat Investor is an attitude towards real estate investing. It's not dependent upon a person's style, what type of properties they invest in, or where they invest geographically. Instead, combat investing focuses on a proactive and offensive attitude towards real estate investing with the gain of profit as the number one objective.
All right, so there are similarities here when you talk about war, battle, obviously without military weapons or strategy, but the similarities are really quite apparent according to you.
Yes. Basically, warfare and real estate investing are quite similar in some basic respects. First of all, it's the need to gain power, respect, and wealth, which is common sense. But the platform for doing this is real estate, control of real estate, and that is done through initiating change by territory through either armed force, which is not desirable and is how it's done in warfare, or in the case of real estate investing, is done through financial force and through a solid business plan.
Are you saying, in a way here, I don't want to make this profoundly an exaggeration, but, the famous book, The Art of War, is it like that? Do you need to adopt this kind of an attitude in order to be successful in real estate investing, or is it more suited to an individual's nature, how he or she proceeds to go about it?
It's actually both of those. The Art of War is one of the books that inspired me to write this, along with Robert Ringer's book from the 70s.
And Robert Ringer has been a guest on this show many times. He's a friend of mine. So you picked two great ones.
Right. Winning by Intimidation, although those titles are what I would call aggressive and offensive to some people, they are reality. And to answer your question about the similarities and why personalities work or don't work, it's not really about personalities. It's more about looking at real estate investing as an offensive play, not a defensive strategy. And I can discuss that later when we talk about weapon systems, as that's where you asked the question about weapons and warfare.
Yeah, well, when you finish this, why don't you just segue right into there? And
sure, okay.
Weapon systems and real estate investing.
Thank you, Stu. And if you look at military weaponry throughout history, it was designed for a very specific purpose, okay? And the same holds true for some matching an investor's style with a weapon platform as an analogy. Let's go through three examples. In the most common example, let's think about a bunker. A bunker represents the vast majority of people who own real estate. It could be a small business person or a homeowner. The purpose of that investment is purely defensive, and that homeowner only uses their house as a line of credit. They use it as perhaps paying for their kids' tuition, and of course, most important of all, it's shelter, as would be for the small business person. So real estate to them is more ancillary. They're not an investor, but instead they look to their home as their bunker, and they don't want to be bothered. So the only thing you can do to them is force them out of their home or out of their business. But other than that, they are in there as a bunker, and they're immovable. They don't want to go anywhere else. They don't want to look at any other investments. Let's go to the complete other extreme, Stu, where you have an aircraft carrier. Think about a public company which is very large and is watched by Wall Street. It's watched by its analysts. It's watched by its stockholders. And most important of all, in many regards, it's watched by its competitors. Competitors know what properties a public company is buying. They know their investment strategies because they're publicly disclosed, etc. Look at an aircraft carrier. Aircraft carrier projects power. It only goes for very high value targets, and it's always moving. It can't sit still, because if it sits still and doesn't make predictable moves, it's punished by the Navy will scrap that aircraft carrier, and or the aircraft carrier has outlived its usefulness if it's not able to properly patrol an area and run a business from, quote unquote, a floating sea, if you will. And then the third analogy, let's look at a private company or a private wealthy family that wants no profile. They shun publicity. They have more wealth than anyone else nearby them, and yet a submarine is always submerged. It's hidden. It has enough nuclear warheads to do the same destruction as an aircraft carrier, but yet it's not known. Its whereabouts are not known. But when it does surface, it makes a big kill. So in the case of a private family such as the Pritzkers, the Crowns, or the Rockefellers, they are the huge submarine that only invest in properties that they choose to, and when they make their strike, it's pretty much uncontested. So those are three examples. There are many other examples, but those are three examples of weapon systems that are built for a specific purpose or investors that are designed to do specific types of investments.
JohnOharenko joining us. The book is Combat Investor, Guide to Real Estate Investment Warfare. It is published by Author House. Once again, the website, combatinvestor.com. Talked about some of the lessons. You certainly referred to it. Can you go into a little bit of detail about some of the lessons learned from warfare that apply to property investing in a little more detail?
Sure, Stu. Basically, I'll give you a couple of examples, but most of the lessons learned are about understanding your strengths and weaknesses, as well as having solid battle plans or business plans in this case. One example is the underdog, which represented the United States in the Battle of Midway, which was the first naval battle where there weren't any ship-to-ship engagements, but was airplanes sinking ships. The Japanese, by far, had a superior fleet at that time and a more powerful naval force, but the U.S. had better technology, and more importantly, they had very good intelligence. So they were able to track the Japanese movements and used aircraft from aircraft carriers to essentially destroy much of the fleet. So even though they were the underdog, they were smarter of the two as far as their business plan and were able to execute effectively. Another example is along the same path, but a little different results. You can have the best technologies and a very good winning battle strategy, but it doesn't necessarily work in every instance. Using the example of World War II again and the Axis attack of the Soviet Union through the Blitzkrieg, the Axis was very successful in conquering much of Eastern Europe, Central Europe, and was a juggernaut. And the Blitzkrieg plan of attack worked very fine initially in the Soviet Union, but at the end of the day, the armies, as they moved in, did not have enough, did not plan well enough for the weather, for the conditions, as well as other factors that eventually led to a catastrophic loss. That same would apply to an investor that is perhaps an excellent luxury hotel operator in, say, Chicago, New York, and San Francisco, but when they go to a market such as Denver or Seattle, the desire for that type of luxury product will be a complete failure. So although it works in 3 or 4 markets, it doesn't necessarily work in every market.
John, just a point of curiosity. What you talk about in this book, have you applied this in your own life? You don't have to get into any concrete examples, but have you applied this in real estate investing?
Oh, yes, absolutely. I think of an analogy of Always Be Closing from the movie. I'm sorry. Sometimes I blank out on the name of Glengarry Rose, and I'm sure I'm mispronouncing that movie. But it was Always Be Closing, where you're directly linked to your results, and you eat what you kill. That's pretty much what real estate investing, from where I see it, how it occurs. And then if you compare that with Bambi, Bambi is an example of a very happy family, a cartoon where everyone likes everyone else, but when there's a fire, everyone runs for the woods and they look out for themselves. So although that's more of a discussion of human nature, where in situations of terror or disaster, people behave either very kindly or very negatively. And in real estate, you see the same type of behavior patterns, nothing different.
Interesting perspective, really fascinating. Combat Investor, Guide to Real Estate Investment Warfare. And it's published by Author House, available in paperback, hardcover, and ebook by a distinguished guest, John Oharenko, and it's spelled Oharenko. It's been a real pleasure having you on, and some fascinating insights.
Thank you, Stu. My pleasure. And
All right.
hope you enjoy the show, and look forward to speaking to you again.
I hope so. We're going to take a break and wrap things up after these messages.